Cultivated this sprawling forest for 35 years, farmer Peter Marshall was shocked when he was forced to pay thousands for the driveway he always thought he owned.
We were lucky only paying $19,000. The next door neighbour, exactly the same situation, had to pay $42,000.
A legal bungle meant the real owner was a man who died 65 years ago, leaving the rates unpaid for decades.
So it's a tiny little fragment of track in the middle of our property. We didn't know that we didn't own it, so I planted all these trees here.
It's standard practice for New South Wales councils to auction off properties that have fallen through the cracks. Usually it's a quiet, casual affair, but this auction was anything but.
Selling, sold.
It was quite terrifying. The bids were coming from everywhere and every direction and very fast.
22,000 bid another 80 on that.
87 bidders registered on the day, including a group that bid on nearly all of the 24 properties up for sale, sight unseen.
87 at the top.
There was a property in Mongalo, 400 square metres. We thought it might go for $1,200 or $500. It went for $18,100.
I imagined that I'd be paying a couple of $1,000.
$6,000, $7,000.
And they bid it up on 1,000 increments. I had to bid back because I just needed to tidy up the title and ended up at $19,000 when they dropped out.
Whether it's got to do with housing crises or land availability, the interest in these properties has just been beyond expectations.
But the council admits it had been told about suspicious bidders who were maliciously purchasing land at other rural auctions across the state.
They go to auctions, will purchase lots and then use that purchase to then try and sell it at a higher price, or the deposit that they pay falls through, or they're just not there for the right reasons.
Understandable not wanting a replication of what happened in 2008.
Has the UK got a finance curse?
Is it a trick question? Because the UK doesn't have finance. The City of London has, and it's not part of the UK.
Good answer. Good answer. It's international, he's right.
The City of London is outside the United Kingdom. Do you know that? It's really shocking. And therefore it's also not part of the EU, which explains although it couldn't be part of the EU because you have to have democratic elections, and the City of London doesn't, right? It's the banks that have the votes, right?
Right.
Per staff,
I never knew
How do you start unpicking this puzzle?
I never knew. That's a very useful piece of information.
And of course, it's not part of the
pretty dangerous piece of information.
And it's not part of the UK because the Queen is not allowed to enter without permission. She's not the sovereign, therefore it's not part of the UK. And of course, that's since 1688.
I have to make a note.
Since the foreign invasion.
There you go, David. That dinner you're going to tonight.
As a result of the current pandemic, the Bank of England has cut their interest rate twice over the last couple of weeks to help stimulate the UK economy. The Bank of England has also extended their quantitative easing program and announced a new term funding scheme for small businesses.
And to the Bundesbank for organising this important gathering on behalf of the German G20 presidency. I also would like to thank you for your speech, Mr. Weidmann. If I would hear an eloquent speech like that on financial inclusion matters from all the governors and ministers of finance around the world, my work will not be necessary anymore. And I would speech, Mr. Weidmann, if I would hear an eloquent speech like that on financial inclusion matters from all the governors and ministers of finance around the world, my work will not be necessary anymore. And I would certainly welcome if I would hear an eloquent speech like that on financial inclusion matters from all the governors and ministers of finance around the world, my work will not be necessary anymore, and I would certainly welcome that. As the UN Secretary General Special Advocate for Inclusive Finance for Development, and also as the honorary patron of the G20's Global Partnership for Financial Inclusion, I have long advocated for financial inclusion, and I have witnessed rise of its support both globally and in countries where it actually should be happening. Together with many partners, we have made important contributions to its progress through valuable guidance such as the SME Finance Action Plan and the high-level principles on digital financial inclusion. Thanks to our collaborative efforts and to strong country commitments, Financial inclusion has advanced dramatically around the world. Between 2011 and 2014, 700 million more adults gain access to a financial account. This basically is a 20% increase. However, 2 billion people are still excluded from the financial system. That basically means 40% of the world's adults. These people live primarily in developing countries and in rural areas. Women, too, remain underrepresented in the financial system, with a 9% gender gap in developing countries. And for SMEs, while they account for more than 90% of global enterprises and provide close to 50% of all formal jobs in developing economies, still 40% of formal SMEs do not have any access to the financial services they need to grow, succeed, and employ more people. It is important to point out that financial exclusion is a universal issue. Within the EU, 58 million people do not have a basic account. In the US, 7% of households are totally unbanked, and that is 16 million adults. Now, although the challenge of financial inclusion is significant, we have a powerful set of tools to drive progress. Among the most promising is digital finance. Generally speaking, digital finance consists of financial services provided through technology, such as mobile phones, cards, and the internet. It really allows us to sharply lower costs of financial services for low-income populations and to reach geographically isolated communities in a way that it was unthinkable of before. In addition to widely known mobile money services like M-Pesa in Kenya, there are many more digital innovations that can promote financial inclusion, including those coming from the vast array of fintech companies. And I would like to stress vast array and diversity. Some of the most significant involve digital data. Biometric forms of identification based on digital data are today being used to authenticate account openings for low-income people who will not have traditional IDs, like in examples where this is happening is in India and Pakistan. Digital data is also used to establish the creditworthiness of customers who would not otherwise qualify loans due to a lack of traditional collateral or a financial history. In China, Ant Financial has made huge progress using big data to serve more than 4 million SME borrowers in recent years. But there are other opportunities as well. Governments that have digitized social welfare and other payments have reduced transaction expenses and undercut the cost of corruption. Mexico has saved more than $1.2 billion by digitizing the delivery of its wages, pensions, and social welfare. And then, of course, there's crowdfunding, peer-to-peer lending, back-office services, and much more that are growing extremely fast and really warrants consideration. With all these different technology-based innovations, new risks inevitably arise that policymakers, regulators, and providers must seriously consider. Let me highlight 3 areas that need really heightened attention. The first risk relates to customer capacity to understand digital financial services. Digital services have dramatically changed the way people conduct their financial affairs. These new tools demand a whole new set of competencies that might be completely out of reach for customers who are inexperienced with banking, let alone computers, phones, or the internet. These customers in developing countries are at risk of over-indebtedness, especially if information on fees and terms is difficult to understand. In Kenya, for instance, 7 out of 20 digital credit services have annualized percentage rates higher than 100%. There's also evidence that people are borrowing from multiple providers, and this, of course, imposes stability risks. The second risk relates to the misuse of customer data. Some financial service providers may not store data safely, or they may share it unscrupulously. Stolen personal data can be then used to identify fraud and other criminal purposes, for identity fraud or other criminal purposes. Providers might also make business decisions based on algorithms that reinforce existing disparities by discriminating, intentionally or not, against groups such as women or poor people. There are already several examples of such misuse in the insurance business. This, of course, leads to more exclusion than inclusion, which is the whole principle that we want to really achieve. And it might also exacerbate certain behaviors, hurting behaviors that can actually also impose even more risk to the system. The third risk relates to financial crime conducted on digital platforms. One recent example is Esubao, which advertised itself as a peer-to-peer lending, matching investors with potential borrowers over the internet. This major Ponzi scheme cheated more than 900,000 small investors with a total of $7.6 billion. So these risks represent a threat to the financial system. They could also undermine longer-term confidence in digital finance and in turn lead to lower usage. And usage is already a huge challenge, given that more than two-thirds of the today 411 million mobile financial service accounts are today inactive. Two-thirds are inactive. So, how can we harness the power of technology and digital finance to drive financial inclusion in a safe and responsible way? First of all, we must take a customer-centric approach that puts client needs and wants at the center of our work, and we must involve clients actively in what we do. Financial service providers, standard setters, regulators, and policymakers must understand customer needs and risks. Hard-to-reach segments, such as women, smallholder farmers, and SMEs, can benefit in particular from digital financial products that are tailored to their own situation. Taking a customer-centric approach could also help address some of the risks I just mentioned earlier, and can be expected to greatly improve the usage of financial services, digital financial services, one of our most important goals. Second, and can be expected to greatly improve the usage of financial services, digital financial services, one of our most important goals. Second, we need to better prepare and empower customers, particularly low-income people who are already living on the edge and may not be digitally literate. We can leverage technology to increase people's financial skills by, for example, designing online programs or developing apps or voice messages that can help poor people manage their money better. Third, we need to put laws and regulations in place that will provide a safe and enabling environment for digital financial inclusion. These laws and regulations need to be balanced. They need to promote competition among different kinds of providers, foster innovation, and protect clients while sustaining stability and integrity. When it comes to protecting customers, regulations need to ensure full transparency, fair treatment, and good recourse mechanisms. Technology has a huge potential to help in this respect. I encourage you to support advances in RegTech to create a technologically advanced regulatory system. Open up a dialogue between regulators and fintech companies, for example, with sandboxes and innovation hubs, is also essential. And it's very important to continue building the capacity of regulators and supervisors around the world who are the guardians of a healthy and responsible financial system. And finally, this great opportunity of digital finance can only work if there is a set of public goods that is put in place. Key examples of these necessary public goods include connectivity, a biometrical ID, digital IDs, cybersecurity, digital inclusion, digital and financial literacy, and policies that support interoperability and a level playing field. Both the public and private sector can really play a role in the provision of such public goods. Ladies and gentlemen, at this point, I'd like to turn to you and ask, what does the G20 need to do to accelerate usage in digital financial services? How can we ensure a more rapid implementation of action plans, guidelines, and the digital financial principles developed by GPFI? Shall we consider systematic coaching from successful countries? We've done really very well, but not well enough for the 2 billion people who still remain included, and the ones that are, but do not really use them to its potential. I think that all of us are committed to this agenda, but I think the time for implementation has come to really make the difference to all the people around the world. Thank you very much.
For what this means for me personally, these changes that are taking place, and it's an incredibly exciting time to be part of what is occurring in the world today with these sorts of changes. I'm excited about it in terms of the issues of inclusion that are the topic of this forum today, and Her Majesty, I think, outlined very, very well earlier today. I'm terrified as a father of 2 daughters about what all this means about how they're going to learn to spend money as they're teenagers in the years ahead. But that is also a liberation that they'll come to terms with, and families are going to have to settle over. But this is a real revolution that we're seeing. And it follows the pattern of many others in the past, and it's exciting as those, and they will bring great liberties and great benefits. But there are also risks and other things that we have to manage. Now, I particularly became an enthusiast not long after becoming Treasurer in Australia, when our own Fintech community came to me and they said, we need you to champion this as a Treasurer, as a Finance Minister. And I reflected on that with our team about what that would actually mean and why we would be asked to do this task. And I think it goes to the heart of why Germany has taken on a leadership role in putting these issues on the G20 agenda. Now, Australia, a number of years ago, was the G20 leader, and we set out issues that we believed were important about global growth. And I think it's wonderful that Germany have taken the lead in putting this issue on their G20 year. And so happy to get on the plane and come halfway around the world to acknowledge and support what Germany is doing as part of G20, and to the Bundesbank and to Minister Schäuble, well done, and we want to support you in that in every way we can. So what I thought I would do by coming along here today is going, well, as a Finance Minister, as a Treasurer, as we call them in Australia, what are the collective things that we need to do to forward this agenda on, and how are we doing that as a practical working example? One of the areas that we've touched on briefly today is the area of RegTech. Now, when politicians come to you and they say, or a regulator comes to you and say, I'm a regulator, I'm a politician, I'm here to help, people get immediately suspicious about how that is going to play out for them. And one of the exciting things about the technology that can sit around the regulation in a fintech environment is that at the same time, compliance requirements on business, and especially those in financial services, can work hand in hand with improvements in their business practices in the way that you actually can construct your regulation. Now, when you start writing regulation in code, then you can use those systems to actually bring about better compliance and better business practice and better outcomes for customers and businesses. You get past the situation where you've got a product disclosure statement which is about that thick and is intended to protect consumers, and you tick the box, and Mark Carney sort of referred to it earlier with the permissions and so on. Which can become quite meaningless and protect no one other than the person who required someone to produce the product disclosure statement and cover their position off. But with RegTech, which I think sits hand in hand with Fintech in terms of how we roll out the implementation of regulation in this area, you can actually bring those two things together. And Australia is working on those issues, as I know many others are. And I think that's incredibly important. It's one of the issues that we put forward, because the cost, some $70 billion a year on compliance for firms in dealing with financial regulation. And that's projected to go to some $120 billion by 2020. Now, if we're going to spend all that money, it would be actually nice to get something out of it. It would actually be great to have a better and more informed and more compliant industry around the world. And so RegTech, working together in this space in particular, in financial services, can achieve those goals. Both de-risking and deregulating an environment can go hand in hand when you look at RegTech issues. And so that compliance by design function, I think, is possible in this new system. The other area which we focus on is on fostering collaboration. And in our rather small fintech sector compared to what exists in the UK and other places because of the depth of those markets, we're actually working to boost that collaboration to give identity and profile and support to our fintech operators through their associations. I've established a fintech advisory council which provides opportunities for them to engage with each other, which is so important. I mean, Tharman was saying earlier today that this collaboration between the larger participants and the smaller participants, rather than an aggressive or negative competition, is how it is moving. And so what we're doing in Australia is about bringing those together. We have some of our biggest banks that sit on that advisory council, and our top 4 banks sit in the top 20 banks in the world, and we have some of the smaller operators, some who are new, some who have already had some significant success. And that collaboration is what actually enables our industry to go forward. It doesn't require us to direct it, but the sector basically in getting together and talking to each other starts to present the opportunities. Because if there's one thing I've learned about fintech and the tech sector more generally, is it's only limited by the questions you ask it and the data that you provide it and give it access to. And that will actually provide an organic process of seeing the whole sector develop. On the regulation specifically, we have put in place a regulatory sandbox. We did lift it, literally, pretty much, from what was done in the UK, and we believe we've improved it. And we've provided a regulatory sandbox which all is required is for eligible businesses to notify the corporate regulator that they are going to participate. There is not an application process, just an informing process. But for those who don't meet the initial standards to be able to just go into the sandbox, there is an application process. But in addition to that, through our regulator, we have set up innovation hubs, and they act as a first point of contact for many of those firms, which is a one-stop shop which can direct them through the various areas of regulatory compliance, which helps them take them through those early stages. And some 100 entities have been involved with that process, and 24 new licences. These are not big numbers necessarily in some of the markets that are represented here, but in the Australian market they are. And they've covered everything from marketplace lending to crowdfunding and robo-advice. The infrastructure has to be put in place. Our new payments platform, facilitating real-time retail payments, comes in 2018, and that is an important piece of infrastructure which will support the development of the fintech industry in Australia. So providing infrastructure is an important part. There is a regulatory feedback loop, effectively, by what occurs in these new technologies coming forward, and it's important for that to reflect back on the regulation that it sits in so many other areas. It's changing how we have to do our goods and services tax. It's changing our anti-money laundering and counter-terrorism financing legislation. All of these things have to keep pace with these developments, but formally within government we're ensuring there's this internal feedback loop which is informing the legislative process going forward. The companies that are developing this need access to capital, they need access to finance. And so we've changed and introduced new tax incentives that sit around early stage investing, angel investing, venture capital limited partnerships, which is providing everything from tax offsets for investing in qualifying companies, capital gains tax exemptions and so on. I mean, other jurisdictions will tailor the tax incentives as is appropriate to how your tax system works. But it's important for these companies to get through what they all refer to as the valley of death. It's no problem finding lots of friends who want to finance you once it's working. But that critical component 4 is where it needs to turn up. Now, if you're in the United States, where there are deep venture capital markets and deep pockets that support a lot of those initiatives, well, that's why they've been so successful in so many of these areas. But in a country like Australia, it's important that we proactively ensure that the tax system will be supporting those companies to find their capital. We're also introducing new crowdsourced funding legislation to support issues there. Earlier we talked about the proof of concept and the exploratory work that is being done. In blockchain technology, in distributed ledger, we also are very active in this space. Our stock exchange is probably leading one of the major projects in DLT as it applies to settlements anywhere in the world. And later this year, they will get to a point of go, no-go with their board as to how they go to the next stage. But the early signs are encouraging. We also have a government instrumentality called Data 61. And Data 61, which is part of our National Science Agency, is investigating how blockchain can be used both by industry and the government right across the economy. And that's not just limited to the financial services sector. It's everything from how we run payment systems in our social services sector, how we potentially can ensure that families can find childcare places on a real-time basis because a parent might have a job interview or something of that nature. So again, it is a function. This is just a function of how many questions you're prepared to ask and how much data you're prepared to provide in an open access format. And so this is helping inform us in this trialling and proof of concept stage to see what can be achieved. Standards, not just within Australia, but right around the world, are incredibly important to ensure that something like this works. And Standards Australia, with the support of the government, that's our standards agency in Australia, is leading the international development of blockchain standards as the secretariat to the ISO on distributed ledger standards. And Standards Australia has nominated Craig Dunn as the chair of the ISO Blockchain Standards Committee, and Craig is actually the chair of my our Fintech Advisory Committee in Australia. And the ISO Blockchain Committee will look at areas of interoperability between systems, privacy and auditing, and will work with people around the globe, including many of you here, I'm sure, to produce the standards over the years ahead. So we also need to cover off the risks, and I think they've been well articulated by the Minister in the previous session, as well by the Governor of the Reserve Bank, Mark, who set out the regulatory and other risk issues which are standard to be dealt with, whether in this new development or in any area when it comes to financial services. Consumer protection issues, cyber security, all of these things need to be covered off. At the end of the day, though, when you're embracing something as exciting as this and unpredictable in this, you have to have an appetite for flexibility. It won't go always as you intend it to go, and in many ways you operate a bit like the startup operator yourselves. And you'll start 7 and you'll hope 1 or 2 will get away. And those 1 or 2 will fund the other 5 that didn't make the grade. And unless we take an entrepreneurial approach to the development of these sectors, then I really don't think that we will realise its full potential. That does carry risks, and they need to be mitigated along the lines that have been said here today. But it is for us, I think, to take a lean forward approach. It's very much our culture as Australians to do that, and it's one of the things we'll be celebrating in our National Day as morning breaks there in just an hour or so. And I think this is a sunrise industry in so many ways, and it is exciting. And so I do want to conclude by commending again Germany for deciding to put this on the agenda in the way they have, and to be thinking about it in the way you've heard from presentations today, about the many issues that need to be covered off and the level of, I think, expertise and knowledge which is being brought to it, as you've seen, I think really does commend the way they've been handling it. It would be remiss of me in a forum such as this, though, given the other issues which I've been engaged with in recent days while I've been in London, to not make one parting comment when it comes to exhorting all of those who are involved in the process of the Brexit initiative, and particularly as it applies to financial services, as someone who represents a country that is a long way from that discussion. And we're not in the habit of giving advice or lectures to those for whom they immediately are dealing with these issues. But we would make this observation, that the UK and Europe are incredibly important to the global financial system. And it is imperative that as this process is worked through, that we lose none of the momentum that has been achieved. I mean, if you look at the G20 and what was able to achieve post the global financial crisis, and how that has been tested since, and how all of the things that have been done has been able to take us through since that time. It's important that while the parties have to settle this arrangement, that these arrangements are settled in a way that realise that unless settled practically, unless settled with genuine transition and with certainty and with the maximum seamlessness, and to ensure whether it's settlements or passporting or any of these issues are able to be addressed perhaps in new and innovative ways and with different ways of achieving it. The end state is one that we don't lose the momentum because this is an incredibly important part of the global financial system. Both the UK and Europe and their interoperability and continuing financial relationship is important for the world economy, and that means whether we are a long way away at 26 degrees on a day like today, or you're here at about 0 degrees, then we all need to ensure that we get the best outcome possibly. So I commend those who are involved in that process, and Australia is keen to support. But thank you for your attention at the end of a long day, and I appreciate the opportunity to come and share these thoughts with you. Thank you.
With banks increasingly fighting for our business.
So here to sort the best from the rest is the man himself, Martin. So a banking revolution, what does this mean?
Yeah, this happened on Saturday. It's called open banking. Most people will be blissfully unaware of it, but it is actually going to be a game changer in the future. From now, with 9 major banks, if you bank online, you can give a third party permission to access all your banking data. So they can see all of your transactions. Now, initially, this is being talked about. It'll make it much easier to switch bank accounts because you'll be able to see who'll charge you the least or give you the best overdraft. Actually, that's pretty easy to do now, so I don't see it as a big deal for that. What it's really going to change is you'll be able to aggregate all your accounts into one place. You'll be able to give somebody your financial details. They'll see who your gas and electricity provider is. They'll see who your broadband provider is, and they'll be able to analyse that for you. They'll even start credit scoring will all change from now on, because people who don't have any data when it comes to being credit scored and applying for a product, they normally get rejected. But now at least your bank account details will show how you tend to manage your bank account. So over the next few years, this thing about open banking is going to change radically. You'll start being asked on apps to give permission to access open banking, when then you'll then go through to your bank account so that they can see your data. Little things like this have happened.
Is that good? Is it a bit scary, then?
Well, there's an open banking register, so only regulated firms are allowed to do it. Yeah, many people are worried about the security and the lack of privacy. Then again, if you want to cede somebody else managing your finances to you and you don't do it yourself, I think there's a lot of positives and there's a few negatives in it. But this is a big revolutionary change. People should start to notice. If you're asked to give open banking permission, it means they're going to see all of your financial transactions and all of your financial statements.
So you can say no?
You can only do it if you give permission. Yeah. It's absolutely only if you want to. But this is the way. In 5 years' time, I suspect a lot of what we do financially will be you'll give open banking permission and somebody will do it for you, as opposed to you putting in your details, trying to answer questions to work out what the best credit card is for you, or gas and electricity. You'll just give them a login to your account and then they'll say, this is the one you want if you continue
What's
to
it going to do to you?
What's it going to do to me? Well, hopefully I could retire. It'd be lovely, wouldn't it? I think they'll...
Australia, the United States and Europe have recently adopted open banking initiatives, changing the way millions of consumers interact with their bank and other financial service providers. Australia has termed their version of open banking the consumer data right, as access to open data expands into other industries beyond just banking, including utility and telecommunication providers. Open banking gives consumers and businesses the ability to safely share their banking data with ACCC accredited third parties. In the banking and finance space, this allows consumers and businesses to choose the financial products and services best suited to their needs.
Open banking connects the consumer's financial data to the third-party application they've selected by allowing the consumer to authenticate directly with the financial service provider. The third-party app, via the consumer's consent, is then able to retrieve account data across institutions through an encoded access token and a direct API connection, ensuring secure and reliable data access. Open banking offers improved reliability, performance, coverage, and consistency of data connections. It will transform and simplify the user experience, allowing more consumers to get the right service at the right time, delivered the right way. Ultimately, open banking enables consumers and business to access their financial data across multiple providers in a more uniform, secure, and convenient manner. With over 20 years of experience in financial data aggregation, InvestNet Yodlee is uniquely prepared to help integrate open banking in your business. We already have a process in place to support and simplify our clients' migration to open banking with minimal impact to the consumer experience and without loss of consumer data. Contact InvestNet Yodlee to learn more about how to take advantage of open banking.
Home lending is competitive. Customers expect speed, personalised service and transparency. Our single cloud-based platform unifies the experience across all channels and supports a wide range of products and customer journeys. Spanning the entire origination lifecycle, NCino improves back-office efficiency and response time to exceed expectations and drive profitability. The experience is fully configurable, scalable, and seamlessly integrated. Eliminate the use of multiple disparate systems. Streamline data capture. Get intelligent pricing and payment calculations. Improve decisioning. And delight customers at every stage of the home lending process. Discover a modern home lending experience through NCino's mortgage solution.
So NCino promotes an AI universal banker. That's what NCino is. It provides different solutions, but it's all AI based. And in the podcast, he talks about digital transformation and so forth, but mostly that they promote a universal banker through an AI system, streamlining all services, including the universal banker is also a relationship manager. So they manage your entire relationship with banking and finance. And they have products across the industry, but as he said in the podcast, it won't just be across the industry. It will be across many industries, including law and accounting. It's not just purely based on banking and having a loan or having a car insurance and stuff like that. So the thing is, by January 2024, ASIC, which is our enforcer in Australia, was still conducting a review into AI and banking. They had yet to actually... it's still, to this day, there is no streamlined governance of AI and banking. It is completely new, as is AI completely new. You know, we've just had that introduced as some sort of chat stuff and, you know, this friendly pop culture stuff. So you get to accept it more. But by the end of this year, so in October, I think it was, the review was complete, and ASIC basically said that there's lots of gaps. More than half of the banking industry doesn't have the correct policies in place and governance for AI, and that we needed a lot more streamlined, a lot more covered, for it to be for the customer to be protected, pretty much, and for it to be secure. So that being said, there's nothing in place as of yet. And yet this guy in 2021 is talking about AI, AI digital ID solution that his company provides. And he's in Australia, heading the Australian branch of this fintech company, this US fintech company, to offer that in 2021.
Of the times in digital days.
I don't actually use cash at all. I don't actually even carry cash.
She's not alone, with Australia on the brink of becoming a cashless society.
My guess is that by 2030, we'll be in a functionally cashless society.
The share of customers using real money plunged from almost 70% in 2007 to just 13% last year.
Card.
I feel like most things have gone cashless recently.
But that's still 1 in 10 who rely on it.
They trust it, they know how to use it. There's a big chunk of older Australians who aren't confident in using a device.
Despite being legal tender, businesses have no legal obligation to take cash. Gloria Jean's the latest company to launch a cashless trial, leaving a bitter taste in the mouth of coffee drinkers.
I was going to pay cash, but if I can't, I'm probably just going to go home.
Australians are paying a pretty penny to not use cash. Average EFTPOS fees are less than 0.5%. If you tap a debit card, it's up to 1%, while credit cards can attract a 2% surcharge. The total tapping tally, almost $1 billion a year.
I guess it's a bit of a silent tax.
And the only way to avoid it is to pay cash. Amelia Brace, 7 News.
If you want to listen up, if you're with CommBank, you're want to be aware of this. They've sent this email out to goodness knows how many thousands, perhaps millions of people with CommBank. It seems fairly innocuous at first. It's called Know Your Customer, and they just want to know more details about you, have a check in the pulse, see what you're after. Are you happy with our service? But read the fine print and you will be absolutely disgusted, as was Lewis Christopher. He's the founder of a respected property research firm. And upon reading this email, it was so invasive, he thought to himself, this has got to be a scam. This cannot be legitimate. The questions that they're asking me, he calls up the bank and to his utter disgust, he said, this thing's Orwellian. They said, no, it's legitimately from us. Particularly, they wanted to know why he had cash because they knew that he'd made withdrawals. What are you doing with that cash? Why do you have cash in your home? He says, what I have just gone through this morning with CBA is disgusting. This is him telling the media about it. He said it's absolutely despicable, Orwellian stuff driven by Austrac. Austrac, for your information, is a financial intelligence agency. That should worry you straight off the bat.
Well, the Commonwealth Bank has backed down on a plan to switch customers to an account that would force them to pay $3 for some cash withdrawals after major public backlash. Let's take you live now to our senior reporter, Fiona Willan, who's in Sydney for us. And Fee, we know the Federal Treasurer spoke with the bank's CEO this morning. Does that perhaps have something to do with this decision?
Well, Jim Chalmers described that conversation as constructive. He says that Matt Comyn, the CEO, accepted that the move that they were going to go ahead with was unacceptable. We don't know if that phone call is what led to this, but we do know that the bank has now put out a statement saying we have done a poor job of communicating this change to our customers. We are particularly conscious of the impact any change to planned fees and charges can have at this time of year, especially given the cost of living pressures that our customers face. So the bank had been facing a lot of backlash after it announced this plan to basically move customers who are on a particular product called a complete access account onto another product called a smart access account. And what that would have meant is they would have then had to pay a $3 fee to get money out from a bank branch or a post office or over the phone. It wouldn't have applied to an ATM, but that migration has now been paused.
Well, outrage in Queensland tonight after a local woman rocked up to her bank to withdraw cash, only to be told they didn't have any. Taryn Compton wanted to grab some notes to pay a tradie, but when she got to the ANZ ATM, she realised she'd forgotten her EFTPOS card. When she asked the teller for the money instead, she was told the bank doesn't carry cash.
And Taryn Compton's here to tell us all about our terrible banking experience. Taryn, what did you think when you walked into a bank only to be told they don't have cash?
I thought it was absolutely crazy. I thought she must have misheard what I wanted, if I'm honest. How can you go to a bank and not be able to get your own money out?
Taryn, that's what I'm confused about. So what's in the bank if there's no cash? Isn't there, if you open up the safe, what's in there? How did they explain it to you?
They just said, I'm so sorry, we can't help you.
I get up early in the morning, 6 o'clock. Being a farmer, I've just always got out of bed early in the morning.
93-year-old George Fowler is a creature of habit. When he needs cash, he'll drop into Carnama's only bank, as he has for decades.
Since 1944, 45, my father introduced me to the bank. I think he gave me £100 to open that account.
But times are changing. Like so many others around the country, this bank's days are numbered.
I said, "Hi, George. I'm writing to you today to say that we're closing the bank on the 1st of February 2023 at 1 p.m. That'll be it." And then they said, "Oh, we're only too pleased to help you to go online," which I'm not in that at all.
George isn't the only one among Carnama's 400-odd residents unhappy about it.
I just think it's pretty disappointing. Like most things in country life, we struggle to keep our small communities going, and when it comes to this, it's just another nail in the coffin.
All right, everyone, I think we're ready to get started. So this will be our last session before we break for afternoon tea, and I have a feeling that we're in for Fintech Biza and Rob Hale, Chief Digital Officer of Regional Australia Bank, who will take us on a retrospective journey of their wild ride to achieving consumer data rights success in 2020, showcasing a truly collaborative fintech and bank partnership that is committed to continued innovation in 2021 and beyond. Welcome, guys.
Hello, great to be here and share our story. I have a habit of just talking endlessly, so if Rob just kicks me, that's sort of just an indication, right? So, yeah.
Thanks, G. Yeah, we're going well so far, though. I should also add, this is only the second time we've met.
Yeah.
So
first time we were supercharged with 13 coffees.
We were. Yeah, so anything could happen here, but look, this is our story, and we hope you enjoy it. I need a clicker. Oh, look at that, it's working. Now we've got some funky slides here. It's a bit of a worry just before because we didn't have speaker notes and we couldn't remember what we were supposed to be talking about.
We're trying to memorise it.
So just to take you back to what on earth was Regional Australia Bank thinking when it got involved in what became the Consumer Data Right? So back in 2017, 2018, we're a customer-owned bank. So our primary focus is on delivering the best possible products and services to our customers. So we don't have equity investors, we don't have that contention between delivering value and dividends for shareholders and delivering value for customers. So CDR just makes sense to us. So we got involved way back with the Treasury review into open banking and the Farrell 1 report. And we kind of just loved the idea of CDR, as you can tell. We've always loved CDI. It just makes so much sense, liberating that consumer data for good, giving our customers and everyday Australians access to enriched products and services. So it all just stacked up for us. So we also threw our hat in the ring in 2019 when the ACCC called for expressions of interest for accredited data recipients to kind of build a use case with the big four banks. So just to remind ourselves, data recipients, they're consuming data from the data holders, and data holders, they're publishing the data, and it's all about the customer. So Regional Australia Bank, we're a bit weird. We got one foot in both camps. We were an early aspirational data recipient at that time, and we were also going to be obligated to become a data holder and publish data. But have you noticed I haven't mentioned the word compliance here? This has got nothing in our minds. This isn't about compliance. This is about creating value for customers, for consumers, for Australians. So we just don't consider CDR a compliance thing.
Of customers who are not quite so comfortable with digital technologies, and we need to also consider those customers who will perhaps not transfer to a digital environment, and making sure that we still have platforms and mechanisms for them to undertake lending and other transactions with us.
Yeah, that's a great point. And again, another benefit of being customer owned is having the community presence and being able to have that presence physically face to face, which increasingly hard to find actually in your local community. Here in North Sydney, very few branches actually still have staff within them. So if you do want to go and talk to anyone, you have to go into the city.
It's really important for us to be able to provide not only the community focus, which we have through branches and our face-to-face service, but we need to absolutely offer the digital capabilities to be able to be competitive in the market.
Currently no means, there is no legislation which provides a consumer with the right to say, I want to use that digital ID or I don't want to use that digital ID, until this bill is passed into law. And once this bill is passed into law, there will be a right for a consumer to say, yes, I want to use that digital ID system, or no, I don't want to use that digital ID system. So for those members of the coalition who are proposing to vote no because they think they're not going to have a choice, if you vote no and this bill goes down, you will be denying yourself and those that you represent an actual choice about whether a business can require that you use some form of digital ID or some other form of digital ID. So it creates the choice and creates the mechanism through which a voluntary use of a digital ID system can be maintained and mandated in this country.
Constantly verifying your ID can be a hassle. Sharing your driver's license, proof of age card, passport, Medicare card, birth certificate and address details puts all that information at risk of falling into the wrong hands. But there's a solution that makes our lives a whole lot easier and our personal info a whole lot safer. Say hello to Australia's digital ID system. It's a straightforward, safer way of verifying who you are online, putting you in control of your information and providing a secure and convenient way to access online services. Picture this. You're changing jobs, getting a new phone, or applying for a loan, so you have 3 copies of your private information stored who knows where. Good news. In the future, you'll be able to do all of this without sharing copies of your personal ID documents. Wherever you are, no long queues, no paperwork. And once you've chosen and set up a digital ID, you can use it again and again for services connected to the system. Did you know there's already a lot you can do under Australia's digital ID system? Things like using your MyGov ID to do your annual tax return or setting up your access to claim back childcare costs online. In a world where cybersecurity is top of mind, the digital ID system safeguards your personal information and saves you time when you need to verify your ID online. Australia's digital ID system brings together government and industry digital IDs that meet strong privacy and security standards. This will mean more secure digital ID options for you to choose from and more ways for you to use them. So why not join some of the millions of people already verifying their ID through Australia's digital ID system?
Australians are happy to tap and go. Now the government wants them to tap and show.
What we want to do is make life easier, allow your credentials to be at your fingertips and keep your personal information safer.
A digital ID called Tex linked to MyGov, removing the need to hand over passports, driver's licences, birth certificates for companies to store and too often lose to hackers.
The Optus incident, one of the first in a large scale, showed why we have to do things differently.
The information will be heavily encrypted, so no sensitive data is shared or stored. Using a QR code and a simple tap to verify ID for hotel bookings, hiring cars, signing up for phones and more.
This is really a game changer in putting citizens at the centre of their identity management.
The Tex system will use personal data already stored on MyGov and send a digital receipt of all information shared and with whom. The chance of fraud reduced, but not entirely removed.
Some people will go and try and create false MyGov identities. We're trying to strengthen all of the issues against that.
The Tex system is in the final stages of development with the aim of being rolled out next year. Using it, though, will be optional. Google and Telstra are helping develop the technology.
Tex will be time-saving. It'll be money-saving.
The opposition raising questions.
Mr Shorten's talking a big game, but let's wait and see whether he can actually deliver.
Saying tap and show is a wait and see.